Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Today we will be talking about IPO that has recently got listed in the markets, Indigo Airlines, or InterGlobe Aviation as it's called. So the excitement in the airline space has restarted. Earlier we had a string of private airlines coming in with patchy history. Most of them either got liquidated or acquired or went into losses. So in the first round we had airlines like East-West Airlines and Damania Airways. We saw Air Deccan getting acquired, Sahara Airlines getting acquired, Kingfisher shutting shop, Jet Airways not delivering any returns over many years. But at the same time, even globally there's this phenomena of low-cost carriers who operate in an efficient manner, and that seems to be working. So we have Southwest Airlines in the US, which has in dollar terms given 30.5% return per annum. Not bad. Stock price, yeah. 5-year CAGR. European low-cost carrier Ryanair, again, so Southwest is pleasant to passengers. Ryanair is infamous in badly treating its passengers, but seems to be doing well for its shareholders. Again, north of 30% returns for shareholders over 5 years. So many years back, Buffett had said this: if a far-sighted capitalist had been present at Kitty Hawk, he would have done his successors a huge favor by shooting Orville down. So one of the Wright brothers was testing the aircraft. The airline industry's demand for capital ever since that first flight has been insatiable. Investors have poured money into a bottomless pit. So this is what Buffett had said, and the running joke about the airline business is this: how do you become a millionaire in the airline business? Start with $1 billion. So when you start as a billionaire, after making all the losses, you will be left a millionaire. That's the running joke, and obviously we have heard many jokes about Mr. Vijay Mallya and Kingfisher and all of that. You just have to look at social media to figure out what people are saying about that. So at one end, there is this legacy negative sentiment, past losses, the whole fear of getting into the airline business. At the same time, you have Southwest Airlines, you have Ryanair, and of late euphoria is there because Rakesh Jhunjhunwala bought into Indigo in the IPO, also bought some shares in Jet Airways. Let's listen into what he has to say.
Okay, let me ask you about a sector which we've never discussed, at least I have never discussed with you, aviation. I read that you've picked up a stake in Jet Airways. That's a publicly disclosed information, but what makes you bullish about aviation as a space? Because that has not made money for investors for the last many years. Other than the price of oil, what could be the driver?
Uday, let me first make a disclosure that I'm interested in every stock that I talk about. I may buy it anytime, I may sell it anytime, I may act contrary to what I'm saying, so please be warned. See, what makes me very excited about aviation is, and about Indigo in particular, that 85-88% capacity utilization. Air India's market share is shrinking every year. There are not many planes on order. Indigo is the lowest cost airline. Can you imagine, he invested 300 crores, he's taken away 3,500 crores as dividend. His return on capital is 300%. And if you just make his first quarter's earnings into 4, right, he will earn about just 640 into 4 is 2,600 crores. which is about 80 rupees per share. And at 80 rupees per share, what price is he coming? At 765, he's coming at 10 times earnings. And I'm very bearish on all prices. I don't see them going anywhere in 3, 4, 5 years. So it's a leader. Industry, one large player is shrinking. Others don't have money. He has got the largest planes on order. He's the lowest cost operator. I think it's a no-brainer.
But you not only applied for the IPO, you also bought Jet Airways. What is the argument for that? Are you creating an aviation basket, or do you think it was a valuation, or would you say it was a valuation call?
I may buy and sell. I'm bullish in a sector. I may buy not one, buy two companies. But my substantial investment is going to be Indigo.
We spoke a little bit.
So the question is this: if you see a very old man smoking, does it mean that cigarette smoking promotes good health or increases longevity? Answer is no. You don't know about the many who smoked and died at an early age. This guy is a survivor after smoking for many years. So looking at one or two successful companies does not tell you about the sector overall. So when we start looking at a company in this sector, one has to start with, in my opinion, somewhat of a negative bias, because the sector has been a graveyard for many entrepreneurs, many companies. Within that, there are exceptions, there are some very profitable ones. So to start with, one has to exercise caution, but at the same time not discard every company which is there, because we have seen Southwest and we have seen Ryanair and a few others who end up making money for shareholders. Another thing that I would caution against is, people say, oh, this is the Southwest Airlines of India. Earlier people would say Pantaloon Retail is the Walmart of India. Now when you make those kind of statements, you are already assuming that all the things will be replicated and the company will be successful. So again, let's not get into too many comparisons. Let's look at Indigo Airlines on its own merits. So as such, the business is not too difficult to understand. It's not a pharma or a biotech company or some new genetics or some new complicated IT company where one does not understand what the business is. Essentially, it's carrying people from point A to point B, from one city to another city through the means of aircraft. They employ people, they pay charges to the airports to use the facilities, they pay fuel costs, they pay lease rentals for aircraft, and their primary revenue is ticket sales and some on-board food and beverage sales and so on, excess baggage, etc., some miscellaneous income. So as such, business is not that difficult to understand, and again, not something which is very prone to disruption. Even I think 50 years from now, 100 years from now, people will still be traveling for either work or for holiday or to meet friends and relatives and so on. So travel has been around for a long time, is likely to be around for a long time. It's not that something like Uber will come up and disrupt the taxi business or something like that. People will still have transportation needs. Also, given the fact that in India we are at a very low base of air passengers and bulk of the people have been rail travelers, as Indian economy is growing, as more and more people start flying instead of traveling by road or rail, there seems to be a good opportunity for volume growth. Internationally, it's estimated that India will be among the fastest growing markets for next 10 or 20 years. So, in terms of management, these are not people who were running a liquor business and suddenly got taken in by glamour of the airline business and started an airline, or people who were running textile mills and who were developing residential and office premises and who got into airlines. One of the promoters is the ex-CEO of US Air, has spent many years, decades in the aviation business, understands the aviation business very clearly. Also, what they have been doing is they have been treating this as a pure airline and transportation business, not as a luxury business, or they are not flashy, appearing in media or owning Formula 1 teams or IPL teams and so on. Very focused players, focus on cost efficiencies, focus on punctuality, things like that. So it's a good management. Within bracket I have said goodish. There are some questions which we will come to, but broadly competent management who understands their business. It's the lowest cost producer or lowest cost operator in the Indian aviation space, with certain caveats. So we'll look at what those caveats are, but prima facie it looks like the lowest cost operator in the airline space. So in that interview, Rakesh Jhunjhunwala mentioned Air India is losing market share, but more importantly, you saw Sahara Airways being taken over by Jet Airways, Air Deccan being acquired by Kingfisher, and then Kingfisher shutting shop. So you have had exit of Kingfisher, Sahara and Air Deccan, three players. There has been a lot of consolidation in the space. Only one airline has entered, new one, which is Air Vistara, promoted by Tatas. So as such, the fierce price wars have come down. Again, oil, which had reached close to $150 a barrel, is now down to $40 for Brent, and NYMEX is in fact around $37. So oil prices have come off in a very significant way, again giving a big boost to the prospects of the airline sector. Capacity utilization has been good for the company. This again is very important in terms of how well the company is doing or how well the airline is doing. We'll look at the reason as we go ahead. So this is essentially the domestic aviation space. To the extent Indigo Airlines will fly to Middle East and Southeast Asian countries, it will also have competitors in terms of the international carriers. So this is the competition domestically. There will be competition internationally also. So broadly, this is what the airline is. It's currently valued at about 36,500 crores if you were to buy the full company at the current market price. Last year it made 1,300 crores of net profits. The year before that was 473 crores. So big jump in profits in the last financial year. Revenue of around 14,000 crores, and it has a market share of about 1/3 of the total aviation sector in India. So reason why you can't multiply any quarter's earnings by 4, and that's the wrong way of looking at it, is that it's a seasonal business. In summer holidays and in winter season, occupancy rates are very high, profitability rates are high. In the monsoon period and in the first quarter of the calendar year, traffic is low. So summer seasons and Diwali to Christmas period is a peak period for airlines and hospitality sector. So any one quarter multiplied by 4 is not the right way to look at it. Looking at it on an annual basis makes better sense. So is it attractive to buy? Is it the next multi-bagger? Is it the next Southwest Airlines or Ryanair? Or is it something that will destroy wealth? Is it something to stay away from? Those are the questions we have today. So coming to the cost efficiency parameter, there is a terminology in use in the airline space. It's called cost per average seat kilometer. So what it does is it multiplies the total cost of a flight, divides by the number of kilometers, which is the length of the flight, and also divides by number of seats in the aircraft to come at this number, to look at efficiencies across various airlines. So Indigo operates at around 6 cents per average seat kilometer. Go Air is about 7% more expensive, not dramatically different. SpiceJet is even more expensive, and Jet and Air India are equivalent. So one argument that people make is Jet Airways is more than 50% cost inefficient as compared to Indigo. But what people miss out is that the configuration of aircraft of Jet and Indigo is different. Jet Airways has a business class segment. Now in business class you occupy more space, the seats are priced probably 3x the economy fare. So just looking at this one number may not be completely accurate in that sense. It depends on the business model. So it depends on how much revenue airlines are able to generate and so on and so forth. But generally it's been seen that India is a very price conscious market. Airlines which have a full economy class configuration are currently doing better than the others. So someone like Airline try to be in the premium category and all, doing that as of now. So in terms of cost efficiency seems to be attractive. However, some points that we need to consider in an airline business, and this applies for airlines, this applies for multiplexes, this applies for hotels, all of these kind of businesses. So a seat in an airline or in a multiplex is a perishable commodity. A hotel room is a perishable commodity. Perishable in the sense, if that is vacant for a period of time, you cannot let it out later on. So if your room in a hotel is vacant for a night, next day you can't accommodate double the number of guests. The capacity is that much. As compared to this, if you are manufacturing cars, if you have manufactured something this month, you don't sell it this month, you can always sell it in the subsequent month. So that is the nature of multiplexes, airlines and hotels. If your flight is vacant in any trip, that seat is lost forever. You will never recover money on that seat. So that's why capacity utilization is very essential. And when we are looking at any period's capacity utilization, say 85%, 88%, whatever people mention, it's not that it's cast in stone that in future also capacity utilization will be that good. So recently we saw these pictures of Chennai where flights were grounded and they could not take off. So what happens to the passengers? Passengers have to be given full refund. The staff will get full salary. These companies will pay parking charges to the airport. So again, if for 4 or 5 days aircraft did not operate, all those expenses will still be there. The people who have leased the aircraft will still demand full lease rentals. So that is one. Again, if there is a SARS kind of epidemic or any medical scare or terrorism related event where there are mass cancellations, so any unrest or political turbulence, so let's say sometime back in Thailand there was a political coup and instability, suddenly people will stop flying to Thailand. So if you are running on that sector, your flights will start going vacant. So one has to be aware that capacity utilization can drop very dramatically in a short span of time. So this is the crude oil price. This is where it had gone up about $140. I think this is NYMEX crude, down to 40 and below now. So what can come from 140 to 40 can also go up. As of now, doesn't seem to be going up in a hurry, but you never know. So today, this company and this sector has seen exits of many airlines, has seen no major India focused event which has caused capacity to drop, which has seen record low prices. So all of these factors have combined today to give us this phenomenal profitability number. Doesn't mean that all these factors will be in alignment all throughout. If that changes, things could change very dramatically. Also, within the company itself, there are certain red flags. So what this company does is, let us say it has booked new aircraft at a price of 80 5 years back. Now today, because of short supply of aircraft, if the current market price of an aircraft is 100, what they will do is, when the aircraft is ready for delivery, instead of paying Airbus those 80 price which was agreed upon, they will go to a leasing company. They will tell the leasing company, please pay Airbus 100 and purchase it on your books and lease it out to us. The agreed upon price was 80, Airbus has got 100. Airbus will pay Indigo 20, that difference. And Airbus will, first of all, Airbus gets 20 cash flow straight away to use for working capital or for any other purposes. And Airbus will amortize that over the life of the aircraft in terms of offsetting the higher lease rentals. So Indigo is able to do this because currently there is a shortage of airplane in the global aviation market. If the situation were to be reversed, if the market price of aircraft would be below the agreed upon price, the leasing company will not even pay 80. If the price were to be 70 or 60, the leasing company will say, I'll buy it at the current market price and I'll give you on lease, and difference you pay to Airbus. So even here, some of the profits that this company is showing is on account of past favorable deals on aircraft purchases. So when we are saying it will continue to do well, we are saying that it will continue to have that tailwind in terms of favorable aircraft purchase deals. So that is one. So today this company is operating about 96 aircraft. As per prospectus, they have given 180 aircraft order already to Airbus. So there will be a almost tripling of capacity. And according to some other media reports, order is as high as 430. So they are going in for aggressive capacity expansion over the coming years. As of now, competition seems to be weak for Indigo, but I don't think one can underestimate any of the competitors. If we look at the track record of the current Prime Minister as a Chief Minister of Gujarat, he's been an aggressive proponent of PSUs. So state PSUs have been aggressive in the gas sector, and in some other sectors capital has been infused. In fact, the state government also acquired Gujarat Gas, MNC operating in the state, and merged it with the state company. They've been into exploration and production activities in the KG basin. So Air India is not going anywhere anytime soon. Government will keep funding it, keep pumping it there. So you can't right away or wish away Air India. Tara backed by House of Tatas, again they have access to capital. You cannot say that they will not ever aggressively increase their fleet strength. Jet Airways balance sheet looks weak, operating on a negative net worth, but backing of Etihad, so again a well funded group. We have to see how that pans out in the coming days and years. SpiceJet has been in a bit of trouble, but recently after the change of management again seems to be getting back on track. So one can't take it for granted that these people will have a completely smooth run in terms of increasing market share in the days to come. The other red flag has been that the company currently is almost 100% funded by lenders. Whatever money the promoters put in and whatever the accumulated profits were there were completely taken out by way of dividend payouts. Okay, now some money would be there which came in from IPO, so some small amount of net worth would be there, but there was negative net worth for a time, then from profits it came back to zero or above zero, and then IPO proceeds would have come in to whatever extent. So now having a positive net worth, but again completely funded by lessors and lenders. So it raises a question, if promoters really believe in the business, what's the need to aggressively take out so much cash, especially when the business is volatile? We have seen occupancy going up and down, oil prices being all over the place, competition coming in, so why not let some balance sheet strength remain? So this is to me a red flag. One has to see how this pans out going forward. Yeah, and we discussed this, there have been certain tailwinds but may not continue forever. So there's a story which I don't know who has said this, Buffett or Munger, but they tell the story that there was a man who owned a horse. The horse had a peculiarity. When the horse was doing well, you could run the horse in a race. It would beat everybody else. It was a phenomenal horse. But at other times the horse would start limping. It would not even walk properly. So the owner of the horse was perplexed, saying, what do I do with this? There should be some cure for this malady or for this disease. So he goes to a vet saying, see, I have this problem, I have this horse and this is the behavior. Do you have any medicine, or can some surgery be done, or is there some procedure by way of which I can correct the horse? He says, I don't know what to do for this malady, but I have one advice for you. Whenever the horse is running well, sell the horse. So in cyclicals, that has been the right advice for most people. So whether you are in shipping or someone like Ajay Piramal has done it in the pharma space, or whenever the going is good and whenever things become exuberant, people try and cash out and people sell some of their holdings. So I come to this question. The person on the left is a billionaire, obviously a very smart guy. The two persons on the right are promoters of the airline. Again, we saw competent people who have created something, has a good reputation for timely departures and arrivals and so on and so forth. But finally, when we are looking at the company, one does get a feeling that there has been an element of cashing out. So the promoters still own about 85-90%, whatever their residual stake is. They haven't sold a very sizable chunk. They are still owners of the airline, but their cash commitment to the airline is nothing now. They have taken out what they had put in and much more. And they saw this as an opportune time and they've listed the company. So, despite being in a good spot right now, I would say that the best time to buy a company like this would be if there is a oil spike, or if there's some tourism related or business travel related shock which creates an opportunity where capacity utilization plummets, profits plummet, the stock price comes down, and that would be entry point. The entry point is not when all moons are in alignment and when it's the best time for the promoter to do IPO. That I don't think is the best time to start an investment. It has the potential to be a profitable company. It has a potential to create wealth for people. I have 100% confidence in the technical capability of the promoters. About shareholder friendliness, it's an untested thing, especially given the hefty payouts that they have taken just before the IPO. So that is the parameter to be watched over the next 1, 2, 3 years, and wait for some shock to hit the sector and which would give a opportune entry price into the company. Maybe the shock will never come. You could miss out on an opportunity, but I would be scared getting into it right away. So that's the short presentation for today. Happy to take questions that you may have. So it's not clearly mentioned, or it's not easy to ascertain. What it does is it reduces from the operating lease that is there. So that is amortized. I think if I am not mistaken, the pending unamortized cashback is to the tune of 1800 crores or thereabouts, which will come to the P&L over the coming years.
I just wanted to make one observation. Actually, what you said is very correct. Unless there's some spike and all that, because now it's fairly priced. After the IPO also it's gone up. But one thing I'd like to share with the audience here, which probably all of us know. About 3 years ago or 4 years ago, all these airlines went to meet Prime Minister in 7 Racecourse Road, saying that हम लोग को बहुत problem है, हमको help करो and all that. So Vijay Mallya came in his, I don't know what, Lamborghini or something. The others came in BMWs. Naresh Goyal also came in a Mercedes. This guy Bhatia came in a Wagon-R Suzuki, and the driver was his CEO. He was sitting in the front, and the CEO was driving. He was driving, and they went to 7 Racecourse Road. Now that example really stuck in my mind, that these guys are very frugal, and they don't believe, as you said, show and all that. So maybe there is something good about it if there is a good opportunity to buy. Otherwise, I agree with you. The whole thing is, there are other opportunities today in the Indian market. But this was a very rare sight for me to see. Ordinary gaadi, Maruti maybe there are so many models, but they really picked after that is Alto only. Wagon-R is really the, So it was a great, it shows that they are not arrogant, they are very humble people and they don't want to prove anything to anybody, they know exactly who they are.
Sure. So another point maybe I missed out in the presentation also in terms of frugality or trying to keep costs low. This company has a business model where they buy only one aircraft model. So they buy only Airbus A320, and now they have gone in for a slightly upgraded model of A320 A320neo. So since it's a single aircraft configuration, that much of less training need. So just imagine if you are a taxi operator, if you have one Tata Indigo, one Nano, one Innova, one Wagoner, one City, so the spares that you have to keep or the trained manpower that you have to keep to service that fleet would be much higher. Instead of that, if you said I'll have 100 vehicles, all 100 of the same configuration, then your maintenance processes and all become very simple. Also you can strike favorable deals with the supplier. So one of the reasons why they have been able to get into these favorable deals with Airbus has been because they have been able to give large orders. So in the period that they gave the orders, they were the largest. So obviously Airbus took them seriously and gave them a meaningful price discount and so on. So that is one reason behind the attractive purchase prices. So maybe that's sustainable, maybe that isn't. So this is something that they have picked up from, I guess, other low cost carriers in the world, which they have tried to clone.
MRO is the second or third highest expenditure for an airline, right? After 20-25% goes into maintenance.
Maintenance is a big problem.
Yeah. See, one of the, point you mentioned that these businesses are, susceptible to risk like flood and all. So aren't these events insured? The revenues, the sale tickets and things like that?
You cannot insure against low capacity utilization. So there will be insurance for, let's say, airplane blowing up in the air. So against a terrorism event or against damage to the aircraft caused on account of fire or flooding. But you cannot ensure that instead of 85 passengers, only 60 passengers are flying my aircraft. What happens to the fewer people flying? That's a business risk. There's no insurance against low capacity utilization. So if there's a disease outbreak, if there's a terrorist event in Paris and people stop going to France for 2 months for tourism purposes, those losses are on airlines. So after 9/11, if you remember, so many aircrafts had to go in for bankruptcy protection. So there's no insurance against big events which cause drop in travel.
And one thing you mentioned that this is a perishable commodity that way. So why, we have seen many times the airlines is just flying 20% of the capacity. So why don't they adjust the fares maybe at the last moment? We always see the fares are kept that way, that level only. They won't come down, even if the capacity is not there. So
they do try and adjust fares. So fares are flexible and all that, but finally giving away close to free may not make sense. And also there are some things per ticket which are unavoidable. So user development or airport charges and all that per passenger and all that. So somewhere they have to keep tickets at a particular level, but I'm sure they try and fill up as much of the plane as they can. They have these off-season discounts and stuff like that to fill up the planes.
We hardly see on any of these price websites, that the fares have come down to such a low level that you can book. You can think of going instantly.
One of the reasons why they're not doing what I read was that because if they start doing that, the majority of people will start waiting for the last minute. And they would not book because eventually if everyone knows that there will be like last minute sale, then everyone will book at the last minute.
Also elasticity may not be so much. So if today you are told that there's a great deal for a flight to London tomorrow, would you go on vacation tomorrow? So that is difficult to execute for most people. Most people who would avail of that kind of pricing would be business travelers who have last minute business trips or people who have emergency. Those people in any way are going to buy the ticket at whatever price. They are not very price sensitive or price elastic. So business travel is to an extent inelastic. People go if they have to go, irrespective of the price. Discounts and all matter for the leisure travel. So that's why they try and fill up bulk of the plane in off seasons through discounts.
to take a 10-year view of this stock and looking at, this specifically at the dividend payout. Obviously, these guys are extremely street smart, but the question is, are they shareholder friendly? And it appears from their behavior, it's a lot like that Facebook movie which we saw a couple of years ago, that they seem to be more focused on enriching themselves. The second point is that as an industry or as a sector, aviation hasn't been, blue chip for a lot of people across the world as investment. So right now, of course, we are seeing good times, low oil and all that, whatever you mentioned. But if you are taking a 10-year view, the bad times are around the corner. So why look at this sector at all in a portfolio?
So Southwest, even over a decade, has done good for shareholders, and it's a great company. So it's not that there's no possibility that any company will deliver good shareholder returns. So in the entire airline space, maybe you need to track only one company. You can discard the other companies. See, again, even normally one would not look at commodity producers too favorably. But if you are, let's say, Saudi Arabia, where your cost of extracting a barrel is very low, maybe even $8, $10. Now, whether crude oil is 140 or it is 40, you will still make money because you are the lowest cost producer. Similarly, even in a cyclical business, if you are the lowest cost airline, even where occupancy is low, fares are low, oil prices tight, you will be a survivor. And the industry is coming out of a phase of consolidation. So a lot of players have exited and people have bought. So maybe it makes sense, I don't know. One can't completely discard the sector because of what Buffett has said or because of
dividend payout specifically.
So dividend payout, two ways of looking at it. One is they are greedy, they have taken away, they have made the company somewhat vulnerable to shocks and so on. Internationally, it's a common practice. So internationally, if you look at a company like Moody's, which is a rating agency, runs on negative net worth because they have bought back so much stock that entire company is funded by lenders. So effectively, it's that. If you look at it in terms of capital efficiency, if we had been shareholders and we got this kind of payout, we would have been very happy, I'm sure.
Absolutely.
So if they do it next year, saying company made a profit of 100 and entire 100 paid out to shareholders, we don't need to keep money on the balance sheet and we keep funding future growth through leases. It's a very capital efficient way of doing
that continuously for 4 years. If that was
they have done it for in the last 5 years. They have paid dividend in 4 years and aggressively.
Okay.
So it's not.
We'll know in the next 2 years.
We'll know in the next 2 years. That's true.
Okay.
But don't you see here the conflict because you go to market to raise money because you need to fund. At the same time, you pay dividend when you are surplus fund. You have surplus fund. Don't you think conflict here and the regulator should also split? They may be capital intensive. Efficiency may be high because the guy who invested at early stage, but for me, if I am buying a share at 500 rupees, for me it is not capital efficiency.
So I agree with you in one sense that if they had not made the dividend, they would not have required to go in for IPO. That money would have remained in the balance sheet. Effectively, it was an offer for sale, despite part of it being fresh issue by the company. What they have said is that our primary objective was to get the company listed. A listed company with diversified shareholder base and gives some connotation helps us negotiate better lease rentals. I don't know whether that statement is correct or incorrect, but that was one of the factors pointed out by the company management as to why are they coming out with the issue, why are they getting listed. They have not brought down the promoter shareholding to 75%. They have issued only a small portion of the overall equity. Over the next 2-3 years, they'll have to issue more shares to to bring down shareholding to 75%. So they said, we own much more number of shares than all the minorities put together. Obviously, we are interested in the future well-being of the company. So both sides of the story, I don't know which side to take. All I am saying today is that
it is very dangerous way. In fact, Reliance IPO also, when they brought it, they only 95% they were holding, but eventually they offloaded the shares and see the price. So I think it is very dangerous way. The intent of taking out the money just before IPO is a big question mark. It should be, regulators should have, I don't know how SEBI is looking at it, but there must be some kind of intervention by regulator.
yes, sir.
It's a common practice at the time of IPO that the promoters try and take their money out, and especially your private equity investors or anybody who's invested. Their main idea is to, when they form the IPO, it is that they want their money to come back.
So it's a common practice to pay dividend, but not such a common practice that to make the negative, make the net worth negative or to completely wipe out whatever was put in. So I agree, most people would take out surplus cash at least. So if whatever past profits are there belong to older shareholders, the new shareholders will participate in the profits from here on. That's the logic. Difference between Reliance Power and this one is Reliance Power was a greenfield project in that sense. This is a company which has been in existence for a while, has profitability, gestation period is not there, but I agree there is some bit of a question mark on that cash being taken out.
So it seems to me like this low cost model works, like it's worked Southwest, Ryanair, and Indigo. So like what's preventing like new entrants from coming in and employing this model and the existing competitors employing it? Because it seems to me there aren't too many barriers to entry in the airline business. Like there have been several new players not happening. So why can't they just copy the same model?
That's an interesting question. So why aren't more people doing this? I would have thought that this practice they've been talking about since they started. Even if you are not a low cost carrier, at least you should standardize one model of aircraft. Even if you are Jet Airways, why not stick to one Boeing model or one Airbus model, go in for bulk purchases, take those discounts and so on and so forth. Probably some of the existing airlines will try and copy these practices going forward. There are no entry barriers per se, but what? So I'll talk a bit about infrastructure, slots and overseas flying rights. So even though technically there may not be too many entry barriers, but you need those boarding gates, you need parking bays, airports are bursting at the seams. You don't have to, even if you have money to buy a private jet, for example, as a business owner, you don't get a place at the Mumbai airport. You have to get down at the Mumbai airport and your pilot has to maybe go to Pune and park that aircraft over there overnight. So there are these on the ground issues which do not make entry easy. Also, when you are starting with 2 aircrafts, 3 aircrafts, you don't have a wide enough schedule. There is a certain element of efficiencies of scale which existing players have, which a new entrant would find it difficult to generate in the initial years. So there may not be any hard entry barriers, but there is some value to being an incumbent and being a successful player over maybe 5 or 10 years.
Like local airlines flying to foreign country in the night, which a new player cannot to utilize the aircraft.
True. So there were certain conditions, whether they should be there, not there. That is a matter for debate and so on and so forth. So there are certain advantages which accrue to the incumbent.
These are only in passenger domain, or they can also do couriers Indigo does, or it's only pure passenger?
So the aircrafts are configured for flying passengers, but there is a cargo hold, in which case they can carry commercial cargo as well.
Currently they are doing it, some plan they mentioned in IPO or somewhere.
I'm not sure about that, but most airlines carry cargo in addition to the passenger bags.
Any kind of WhatsApp moment you see in this industry, like it happened with the Uber, you said, hotels industry, we saw at one point of time the capacity utilization was very high, but now with coming of Oyo rooms and Zoo and it's disrupted the industry. Something like 4G, 5G, with great business class coming down and with a lot of inefficiencies now. If you go to Delhi, you just waste 5-6 hours, so it doesn't make sense for travelers to actually go only if it is very urgent. Some of these things can kind of lower the capacity utilization going forward.
So something with, over the very, very long term, not in the near term, increasingly security is becoming more and more tough for airlines, and other modes are becoming more and more efficient. So today, even though there are flights from, let's say, Mumbai to Pune, but it's more convenient to drive down to Pune, or newspapers are having the story that Japanese are going to fund a Mumbai-Ahmedabad bullet train. Now, if high-speed trains come in, or if road networks improve, at least short-haul flights could see some loss of attractiveness. So, longer term, maybe that could be a threat. But otherwise, for long haul, I think air travel will be there for quite some time. And again, bullet trains and all will not cover the entire nation. It will start Mumbai, Ahmedabad, maybe later on cover Delhi.
I think Southwest and Ryanair profitable on their core operations, or do they also make money only because it's airways?
No, they are profitable on core operations.
What percentage of the profits do they come from that?
So I am not an airline expert. The reason for taking a look at these things was because of the IPO. Pre-Indigo, there was no reason to look at airlines at all. It's just that I've gone through Indigo's prospectus and went through some of the filings of the other companies or the stock price performance. I wouldn't have the ratios and numbers offhand.
What are one or two takeaways? For example, Indigo is doing good profit and Jet Airways or other players are doing losses year by year. What is the one or two points you highlight reason behind this difference?
One big difference is, as you mentioned, lower maintenance cost, single aircraft model and configuration. Second is 100% economy class configuration, which results in lower cost per kilometer, CASK. Because of these reasons, they are able to achieve cost efficiencies, and their on-time performance and focus on timely departures and arrivals has given them a good brand recall with business and leisure travelers, resulting again in high occupancy and so on and so forth. But I think another big factor is discipline in terms of not going overboard, in terms of ordering too many aircrafts and bunching deliveries at a time and then going in for a lot big discounted sales and stuff like that, then vacillating between low cost and premium and so on. So Kingfisher came out with a premium image and best in class experience, so that in-flight entertainment and gourmet meals and so on. Then they went and acquired Air Deccan, which was completely contrary to what they stood for. Then again they tried to convert Air Deccan to full service model. Jet Airways again did all these flip-flops. Started as a full service carrier, started Jet Connect, then they acquired Sahara, then so they had Jet Airways, Jet Connect, Jet Light, 3 different brands operating at the same time, then again moved to a single configuration. So there have been a lot of these flip-flops. These guys have decided this is what we want to do, and they've gone about executing that in a disciplined manner. Great. Let's continue the discussion over snacks.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.